Well, the Fed cut its target rate by 50 basis points, bringing the lower bound down to 5%. This was the first cut since 2020. In addition, the Fed updated their summary of economic projections, aka the dot plot. These indicated that the average Fed member would expect 1 to 2 more cuts coming by the end of 2024. Fed Chair Powell cited that the Fed's become more comfortable that inflation is trending towards their 2% target, but they are concerned with slowing job growth. He said it was the cumulative effect of the data, the slowing inflation, the cloudy jobs picture, downward revisions, deteriorating economic conditions across certain geographies that really pushed the Fed to the 50 basis point cut. There was some debate whether they would go 25 or 50. There actually was a dissent. Someone wanted a quarter point cut. That was the first time someone dissented since 2005. But ultimately the Fed went with a 50 basis point cut. Yeah, I would say there was a couple surprises. The first being the size of the cut. There was some debate up until the meeting whether they would get 25 or 50. Fed Chair Powell confessed that they actually had that debate during the meeting, but the minutes will tell how spirited that debate actually was in the coming weeks. But again, the size of the cut took many market participants by surprise. In addition, the movement of the dots was kind of surprising. If you go back to June, most Fed participants estimated there would only be 1 or 2 cuts by the end of the year. But there's been some shift in market sentiment. They're now projecting on average that we'll have a total of 4, including the ones we saw yesterday. So there's definitely a shift in the committee as to the trend of the economic environment. And then maybe the third thing that's surprising, and maybe more so to the casual observer, is that after the announcement and after the press conference, rates really didn't move. 2-year rates moved a little bit down, but came back halfway by the end of the conference. 10-year rates and 30-year rates actually moved up. So what that's saying is, despite a 50 basis point cut, the market was already fully pricing this in. They had totally suspected there would be a cut. 25 to 50 didn't affect them too much, but it should just tell people, especially the casual observer, that the market's going to move well ahead of the Fed. Well, it'll be really interesting leading up to the next meeting, which is scheduled for the first week of November. Powell set a precedent for a 50 basis point cut. And if the data continues to be weak, he probably doesn't have a choice but to cut another 50 basis points. But if the data comes in flat or surprises up to the upside, it'll be really interesting to see if the committee pulls back to 25 or doesn't do anything at all. And keep in mind, the next committee meeting is the same week as the presidential election. Now, Powell's adamant that he's not politically motivated. The Fed is an independent entity and he's going to do what's best for the American people. But we all feel this is going to be a very close competitive election, and if the data supports that the Fed doesn't have to do anything, wouldn't be surprised if they step to the side. If the data does come in weaker, Powell's not going to have any choice but to cut 50 during the week of the presidential election. We've definitely seen a significant rally in bonds ahead of yesterday's move. Like I said, the market will move ahead of the Fed. But that doesn't mean the valuations still aren't there. They're not as attractive as they were a couple months ago, but there's still some decent relative value in bonds. 2024 is on pace to be the second highest year for debt issuance, and most of that debt issuance in the high grade space is going to be north of 5%. The record year was 2020, where most of that issuance was around 2 to 3%. So over $1 trillion has come to market, over 5% coupon. This is still very attractive for a lot of fixed income investors. So while we have seen some rally, there's still significantly decent valuations available to fixed income investors.